Hi, good morning, everyone. Hope you can hear me well. I believe it's working. So welcome to our session, webinar on the on trading, identifying, navigating market volatility during the Asian session. So when I was asked to do a webinar, I was thinking what could be the most useful thing for our traders based in New Zealand and Australia. And because of our placement in the world, where we are located globally, we have a unique opportunity to trade the Asian session, which is often quite overlooked. And I guess it doesn't get the popularity that it deserves. So you mostly have people talking about the London and New York session, a lot of big movements, a lot of big reversals that happen. But the Asian is quite often overlooked, and that's what we're going to look into today.
I got it.
So apologies as well. This is an open office, so if you hear people talking, people walking around, that's just how it is in our NZ office. Gets quite busy during the week. So before we start, a bit about me. My name is Jafar. Graduated with a health science and economics degree. My first job was in marketing at a crypto company, so that was my first kind of foray into finance, decentralized finance, so a lot of NFTs, Bitcoin, Ethereum, altcoins, trading, a lot of community management. But I felt a bit disillusioned with the kind of Web3 world. It was kind of out there in the cloud. And I felt more, I guess, attached and drawn to real life assets that affect our real life currencies, gold, global politics, and I guess something that you can really relate to. So I actually started trading with Blackbull Markets as a client about 2 years ago because of their TradingView integration. That was really nice because TradingView was my favorite charting software. So with Blackbull, you can sign up an account on TradingView, log in, and then trade right off the charts. You can do your analysis and you can trade off the same charts. So after trading with Blackbull for a short while, I decided to join Blackbull Markets. Unfortunately, that meant that I couldn't use Blackbull as a trading platform anymore. So it was a conflict of interest. But nevertheless, it's been a great journey. I've been able to learn from a lot of experienced traders we have at Blackbull Markets, as well as, of course, a lot of new traders like myself at one point. And I guess, everyone goes through the up and downs, the start of their trading journey where they lose a bit of money. And there's a lesson to learn from that as well, from every client that you meet, and the numbers tell a story. One of the gems that I've learned from working here, of course, is the Asian session. And one of the reasons how I've learned that is because of my interest in trading. I try to keep it relevant. I still try to trade while at work. And of course, the lunch break kind of gave me a light bulb moment and be like, wait, there is volume coming into the market. This is a potential opportunity that I can take care of. And so often in the markets, you see I maybe take some calls, do some emails. Some of you might be my own clients. So I might be helping you with your own inquiries and issues. And then in lunchtime, I'll go off and do my analysis and maybe put on a swing trade. Now, before we dive into the Asian session, should understand the global picture. So basically in FX, volume moves prices, right? So in terms of Asia, Asia is made up of Japan, Hong Kong, Sydney, and New Zealand. And around 20% of the Forex volume globally going through the world comes through the Asian session. Now, that's not a small amount, right? That's 1/5 of the volume, buyers and sellers coming in and out of Forex. And that volume is what moves prices. And generally, the Asian session is treated as the start of the trading day. It's what sets the tone for the rest of the day, as well as for the London and New York session. So while you trade the Asian session, you could trade it standalone. You could also trade it as a precursor to get a feel for the order flow, where the orders are going as you move into the London and New York sessions. So 20% of FX volume goes through Asia. Then you have the London session. Of course, everyone knows about the London session, has a strategic global position. So it's the center of finance. Approximately 40% of FX volume goes through London. So by far the largest. And it also has a unique overlap between the Asian session and the New York session, right? So pre-London coincides with the end of Asia. End of London coincides with the start of New York. So you have a lot of volatility. Quite easy to get stopped out during the start and end of London sessions. But if you have a strategy that you've been testing, there's a lot of opportunities you can take advantage of as well. Of course, lastly, we have New York. Approximately 20% of FX transaction happens in New York, and a lot of economic reports. So you see huge swings in the market. Generally, I try to stay away from trading economic reports. But if that's what you want to do, you're more than welcome to give it a try. So now if we look into the Asian market in particular, so we've chosen to trade in the Asian session. It runs from NZ time 1 p.m. now because of our time zone shift. So 1 p.m. to 8 p.m. In New Zealand. And then that's 11 a.m. to 6 p.m. if you're based in Australia, right? So prime time if you have a full-time job. During your lunch break, you can go look at the charts. Or of course, if you do a part-time job, if you're at home, you can trade during the day. And obviously, trading during the day is a bit different than trading during the night. You still have your energy. You're not getting closer to your bedtime. So it feels more like you're actively participating in the market, that you have a job you're looking forward to. Now, in terms of what to trade during the Asian market. So the most volatile pairs that you have in the Asian session, you see your dollar yens, your yen pair, your NZ dollar, your Aussie dollar, your Swiss franc, and sometimes the euro, sometimes the British pound is also trading. Now, what you want to look for is your volatility. More volatility, you have more movements, you don't get stuck in a range. But of course, you have to balance the volatility with the spread of the pair. So the higher volatility, sometimes you get a higher spread because that's how the LPs, right? They balance their risk. And so you have a decision to make what you want to trade. Personally, I like trading the British pound yen pair. So the British pound compared to the euro will always have a bit of extra volatility. You do pay a bit more in spread when you get in and out of the trade. But in terms of my own experience with the pair, I found that maybe the extra 10 pip range in the session is worth the extra 0.5 to 1 pip spread that I'm paying when I'm getting into a trade. Now this probably would only work, this perspective that I'm talking about is coming from more of a swing trading perspective. I'm not talking about, hours and days of swings, but rather maybe half an hour to an hour, 2 hours, right? So we're not talking about scalping. We're not getting in and out of the trade. Otherwise, that gets quite expensive in the Asian session because of the spread. So I'll bring open a TradingView chart. I'm speeding through everything. It's already been 8 minutes. Okay, great. You can see a TradingView chart here. So the indicator we're going to add is going to be called trading sessions. This is the only indicator that I use when I'm trading. It's actually called market sessions. Basically, any indicator that can show you visually the prices, where the session starts and where it ends. So is this the right one? No, it doesn't seem like it is. Market sessions. Market sessions by Leviathan. Maybe it's this one here. Okay, yep, there we go. So when you add this indicator to your chart, you do have to adjust it slightly because the timings are a bit off. So Tokyo is the Asian session. This is UTC time. Yep, UTC. We might as well put in London as well, just so we can have a look at what the trading week looks like. And New York, of course, 12:30. 12:30 to 8 o'clock UTC. Okay, now as soon as this populates, we're on the daily time frame, we're not going to see much here. So good one to have a look for is the hourly time frame, right? So you can see how the pair moves differently in the different sessions. The first thing you'd notice is that yes, the Asian session has the smallest range in general, right? Compared to the London and New York sessions. That's of course why, because only 20% of FX volume comes through during the Asian session. But what you also notice is that there are opportunities to book some profits. This is in 1 to 2, maybe 3 trades maximum per session. If we look at the range of the market, so this is on the USD, this is on the dollar yen pair. The range is about 50 pips. Let's actually look at yesterday. Yesterday was a huge movement. Why? Because we broke out. I'll just quickly show why. I was watching this all day yesterday as well. So we broke out of a consolidation in this area, and then the last, I guess, zone that we have here of supply, sellers coming in, taking profit is around this area. So you had this huge, it's kind of a vacuum that you had coming all the way back to $153 all in one day. And a lot of it actually happened during the Asian session. So it's quite exciting to see yesterday. But anyway, so we said 50 pips yesterday, right? In terms of the British pound yesterday, we see how much generally it would be a bit more. So 160. So you can see how the movement is so much higher on the British pound because it is a less liquid asset, right? It's not an exotic asset, but it's more exotic than the dollar yen. If you compare as well, the previous 2 days ago on the Asian session, 100 pips on the dollar yen, you have a much smaller movement. You can see it visually as well. On Blackbull, the spreads here is 1.4 on the dollar yen on a standard account. On a prime account, this would be 1 pip less, so it'd be 0.5 to 0.7. On the British pound, it's going to be 2 point, yeah, so it's about one pip more. So really up to you if you want to decide that if it's worth, the extra volatility, if it's worth the extra pip that you're paying when you're getting in and out of the trade. Now, how I like to analyze, let's just take away the extra noise here from the London and New York session, and we're looking only at the Tokyo session. So I'm looking at this from a perspective of I only trade the Tokyo. And let us segregate the start of this week to where we are now. This is the Monday. Okay, let's change this to an NZ time. I'm looking for the gap. So this is so this is essentially the start of the trading day. Where is it? It should be around 10 a.m. Yep. Okay. So we have here is the start of the trading week. And let's go back to the 4-hour to get a better kind of look of what's going on. Right. So the great thing about, day trading the Asian session is that while you do have to kind of understand what market structure you're in, you don't have to pay too much attention about the long-term trend. Why? Because the market fluctuates every day by quite a large amount. So every day it's almost random. Although where you do have to be aware of the market structure is when you have days like yesterday, where you've broken out of the structure and the market is ready to make a big move. But generally, you don't really have to worry about that. So we go back on the 1-hour. And we put our indicators back on. Okay. Now, one of the lessons I've learned the hard way trading the Asian session is that you generally don't want to get into the market too early. You could be tempted to get in at 10 a.m. pre-market, pre-Asian. But you have to understand that the traders, the volume hasn't really kicked in, right? So the real trend in the market hasn't really started. So you generally want to wait a bit until you see some kind of movement in the market. Traders doing their thing, setting up what they're doing. The Asian is set up for the rest of the day. So just by looking at the 1-hour chart, what do you see here, right? So the first 2 1-hour candles, you can see a lot of buyers are buying up this area here. And what you could look for is a long position from here. Stop loss a bit lower than the wicks. You want to give yourself a bit more, generally because at the start of the Asian can be quite manipulative, so it's quite easy to get stopped out. And where is your take profit? If you generally, I'd put my take profit quite close, so somewhere over here. Would be taking out I guess the highs in the pre-market that we've set. So what this looks like on 15-minute, it's stars here. On the 15 market, it looks, is this the same Monday we're talking about here? This is a really nice buy. Um, but where are we at? Sorry, this is not the laptop I usually use for my trading. So Monday, 14th of October. We went 2 weeks back. No problem. Right. So the Asian session started off quite strong, in a seller's mood. Um, Quite often what you see here is just the early buyers, the early reverses always get stopped out, right? So this is almost always get stopped out. This is the first kind of hint that you get that you should wait a bit. So this is the first candle here. It's quite a big candle, and then you have some buyers kicking in. So this is our first kind of zone that we're conscious of, where we want to start buying from. The second, of course, this would be the start of the day. This is the end of the day. Start of the day, pre-market, we've printed a low here. And it's likely that we will retouch that low. Now, the great thing about buying lows, it can be quite hard to see a red candle go down further and then press the buy button. But what you have to understand is when you do that, you actually put the odds in your favor. Why? Because you can have a very small risk to reward ratio. Let's say if you, after all of these candles, let's say if you get in right at the bottom of this wick where we printed a 15-minute candle here. What this looks like now, if you target the highs of the pre-market, is that you have a 4.2 risk reward. If you got here, if you press the buy button straight away, if you had your stop loss just under the wick, you get stopped out. If you had it under the wick of the pre-market, you'd be safe. You're still near 2.6 risk reward. And so this is just one trade, right? So in the Asian session, you're at work. You hop back when the Asian session starts. You check in maybe every half an hour. You see your setup. You put the trade. You close the computer, and you just go get back to work. You forget about your trade. That's the easiest way to manage psychologically how to stay in your position and just not touch your trade. So this is an acceptable entry. The problem with this is that you don't know what's going to happen as the price comes down here, right? So it could have well just broken down, and you would have been stopped out. So it's better to wait till the price reaches the area of importance and see how it reacts. We printed instead of closing below this area, the candle closed here. So it's a viable trade for us to take. And that's what we do. So this is the Monday. Another amazing thing about trading, trading this one session a day, one trade a day, 1 to 2 trades a day, is that you really don't have to care about what happens here, right? It's so easy to psych yourself out when you're always watching the charts. You're always thinking, what am I missing out on? And that takes away a lot of your mental energy, and your focus, right? When you start the day, you have your physical energy, how much you can move and exercise and run and work per day. You also have your emotional, mental regulation energy, how many decisions you can make per day. And now by just focusing on this small box, you don't care about what happens here. You only have one decision to make per day here. Now, what time is it? 11:20. I'll do Monday, Tuesday, Wednesday. And then I'll check back in to see if you guys have any questions. I don't want to be rambling on for too long. Okay. So on Tuesday, what do we see? Right, we have a consolidation here. We're at our relative highs. And if you remember our market structure, if you look at the 4-hour, we're sitting at the top. So if we go back to a 4-hour, should be sitting somewhere at the top. Yeah. It's a bit messy, but how do we know we're at the top here? Because something like that, right? Yeah. Okay. Now we're at the top. How do we know that we're going to break up and we're not going to break down? Short answer is we don't, right? But what you do know is that you do know that the Asian market hasn't, at this point, it hasn't started yet. So the real volume hasn't kicked in, and without volume, you can't have a breakout. There's no one pressing the buy button at the trading centers because they haven't woken up yet. So what you can do is you can wait for the trend and the price to play out. What do you see in the first 2 hours, right? Of the first half an hour of the Asian session? You see a breakdown below this consolidation level. And what do you see here? Your next kind of area that you're concerned about is this one here. So at this point of breakout, you're kind of thinking two things, right? It's either going to continue going down and we want to look for a sell today, or we might have a strong rebound and we'll break above this 195.7 area. And this is, by the way, what my internal dialogue sounds like. So let's say we know it's going down here, so we have a bias, right? We know it's going down. Let's just say that we're buyers and we're looking to buy the market and we think it's going to break up. What place do we want to buy? Where is the real where would the buyers kick in and where is the support? It's around this area. So anything that happens here, we're ignoring it. Once we come into this area, we see this green candle printed here. This is a double bottom, by the way. So of course, it's important to know your candlesticks. Even though on the 50-minute, it's not so obvious, but on the 5-minute, you'll see that the two candles they touch twice. Where are we? Tuesday. I need a mouse. Okay, even on the 5-minute, it's not that obvious, but basically you have a touch here down, a retracement, and a touch here, and this is kind of this wick here is your double bottom, and it was rejected, telling you that there are buyers in that area. I'm gonna try just stay on the 15-minute for now. So, like we said, we're a buyer, right? So let's say that you put your order here. You think this is the right place. In terms of your stop loss, just to be safe, you're going to put it maybe a bit down. You can even put it here. What I like to do is I like to look at look left and look where the candles are. So you have this wick here. This wick represents buyers. Just to be safe, you can even put it here, but this should be more than enough. If you're expecting a breakout, you'd think that at least you'd get above this level. Now, in this kind of situation, you press the buy button, put your stop loss, you put your TP 3.62, and you come back to this area. And you see this candle being printed. And then you see the next 5, 6, 7 candles, all looking like they are rejections, right? You don't see strong momentum. At this point, you could just take the loss, right? Which is completely fine. As long as you manage your risk, right? Assuming you won the previous day, That was a 2.5R trade. This one's a 3.6 trade. If you take the loss here, that is completely fine. That's within your risk management strategy. If you keep trading like that and you take small losses and big wins, then you'll end up profitable. But if you were checking in on your trade and you knew that you weren't quite sure, right? You were bullish, but you said that perhaps it's a bit too early for us to break out. We'll see what happens at this level. If we can break out of this level, I will continue to be bullish. If not, we'll start selling. At that point, when you see the price action here, you can flip your position. And if you're a bear, if you're originally a bearish bias, you would want to be looking at this level to sell, not here, because you're kind of already overextended. So you take a short here. You can put your stop loss above here, or probably I put it up here. Why? Because you have a strong green candle here, and then you have straight after a strong candle, you have a strong rejection, but it's not so convincing. You put your stop loss down here. What can you do for your take profit? This, of course, is not of course, but it's likely to get taken out. Your next zone is you have this area here. So you put your take profit here, right? You put your take profit, you forget about it, you come back and you've maybe late in the night, you finish work, you open up your computer or your phone, and well done, you've booked a profit, or well done, you've booked a small loss and you've stuck to your trading plan. All this mess we can ignore because we're not trading that. This one is an interesting one. This one was the Wednesday. Pre-market, right? You had a huge drop, and then you had really weird candles, especially this one. I had no idea what was going on this day. But what was quite nice to see, I didn't personally book this trade, but you had a kind of a breakout in this area. Price came down here, pre-market took a dip, and it clawed its way all the way back. If we look at the 1 hour, perhaps it's going to give us some insights into what exactly happened. Let's take away these lines. Okay, so just looking at the 1 hour, I can notice a couple of things. First of all, the previous day, right? If you're bullish, you're wrong. It was actually bearish. You've come down. Now we're still at a bearish trend. Where the buyers would come in, of course, is this area here, right? This would usually be a nice place to buy, but as we saw, the candles were all over the place. So it's quite hard to get a nice entry in. You don't have a stable foundation from where you can place your trade. But if you still had your bearish bias on the 1 hour time frame, where would you look to sell? And here sometimes having the New York would also be quite helpful. So essentially, we can see the breakout happened right here if we draw this line. And what price has done in this case is that, where is our ray path? There we go. Price has broken down, has touched this demand zone where buyers are, has rebounded, and then has come back all the way down. So as a seller, you're really thinking, where are the places that I want to sell? In the situation where we've broken out of this trend line and we're looking for supply because we want to trade with the order flow. Where is the best place to sell? And now if we draw our kind of zones, this could have been potentially a good place to sell. As well as the second zone, if this doesn't hold, would be somewhere here, which is the original breakout area. So this is where looking at the higher time frame can help you decide what's happening on the lower time frame. So this is a buy zone. It's quite hard to get a buy in the 15-minute, but if you're watching the 5-minute, you could potentially get a trade in the 15-minute. I don't see any great candles where you could sell from, right? So this is your pre-market sell, a full retracement of the pre-market above. We don't see, this is sure, it's a bearish engulfing candle, but it's not quite enough because it's not a bearish engulfing candle that happened down here. We've already surpassed this pre-market bear candle. But what we do see is that when we go higher, we see 1, 2, right? And your third one is a huge drop down below. This may have been a news. No, I don't think it was a news event. Yeah, but it was just sometimes you get random market action happening during the Asian session. Someone added an extra zero on their sell order and pressed it. Probably someone from the Aussie Trading Center. I'm looking at you, Aussies. But anyway, you could put your sell position here, or you could wait for a breakout, put it down here. Essentially, your stop loss is very simple. Put your stop loss here. Look at this breakout. This is kind of the bulk of the candle we're looking at. Pretty much the logic behind our stop loss is that price shouldn't. If price exceeds our stop loss, it means that our idea was wrong. This is where the sellers stepped in. See the wick represents where buyer territory once was. Sellers stepped in and pushed the prices down. It turns into a wick. So we put our stop loss above the wick, and a conservative TP would have been here. Why? Because this is we expect this to be taken out if we are bearish. Now this is I guess one final point I want to touch on. It's something I've been working on myself as well, is that I'm quite attached to fixed reward ratios. Not in the terms of I'm only going for 2 or 2.5 or 3, but I kind of limit myself sometimes in terms of how much profit I can book per trade. So here my take profit was here because I expect this to be taken out. This is a 2.5 trade. Now later on, as you gain more experience in the market and you're trading, you're gonna notice that no two situations are ever the same. Sometimes you have a unique situation such as this, right? And when you have a huge 15-minute candle that just doesn't stop, to improve your long-term profitability, it may be worthwhile to hop on a higher time frame and look at where the price may lead you. And then this is the next supply zone here. So you go down, you look left, this is all empty, it's a vacuum. This is where you have the consolidation. This is where likely you have some orders sitting. And then that extra kind of insight later on. So maybe start with a small one, get a bit confident. The extra insight that you're going to have and the experience you're going to get, you're going to be able to increase your profitability. Of course, it doesn't always work, right? Let's say you put your TP here, it comes down here and it hits your stop loss. And the first time that happens to you, it's going to hurt a lot because you're going to be thinking, why don't I just take profits here? But it's just part of the strategy. The very last thing I noticed is that in the next Tokyo session, you see this demand zone supplied here. We drew here, it got respected, and you had to bounce back up. See someone raising their hand. Hi, Sarang, how are you? I don't want to be talking for too long. I wonder if I'm going to take a look at the Q&As here. Quick question. I'm after the best times of the day for momentum trades. This is not a question that can be answered for. This is a specific time where you're going to have the strongest momentum. To look for trades, you just have to be on the charts. You can't be on the charts 24/7. So you choose a time to look for price action. In terms of this session, we're talking about the Asian session. So the times that you could look for is during the Asian market. As long as you're present, you don't have to have your eye sticking on the chart. You will notice, for example, that wick that we saw on Wednesday, that huge wick, that is a very strong momentum trade. And that's something that you can put in. Can you recommend any books about trading Bitcoin? The first asset I traded was actually Bitcoin. In terms of books, though, there's one I highly recommend. It's by Tom Hugard. He's a very well-known day trader. He trades the DAX every day live. You can find him on YouTube, and he shares his entry, his sell. He shares everything raw, and he's one of the legends in the industry. So he has a trade called The Best Loser Wins. It's a risk management. It's a book about risk management, essentially, and psychology, because that's really what's going to help you with your trading. In terms of I wouldn't recommend any books about trading specifically Bitcoin, but just keep your eyes on the charts every day. Is this being recorded? Yes, it's being recorded. You'll see it on our YouTube and our website either. Do you focus on the round numbers when trading British pound, dollar, yen? Sometimes yes, sometimes no, right? When do we focus on the round numbers? This is really important, is when we had that event yesterday where we had a huge breakout as the pair has been consolidating for a few days. When that happens, you're not quite sure where the supply is and where to take your profit. And sometimes it's better to let a trade run, right, than take a profit at a particular place. When that happens, what you can do is at every 50-cent increment, you can put like a horizontal line and see how the price reacts to that area. So if I'm looking at yesterday, I'm just looking at my screen. This is a relevant question for the movement that we had yesterday. So I had my horizontal lines at 197, 197.5, 198, 198.5. And just under 198.5 is where we had our reversal at the end of London session. But essentially, you can aim for every 50-cent movement, every 10-cent movement, depending on what time frame you're after. Do you discuss your trade ideas with other work colleagues? I sometimes do, I sometimes don't, because if it doesn't work out, you get roasted and in the office. How would you know how to buy there? Short answer is you never know. You just have to take the trade and find out later. Do you trade indices or equities? Neither. So I trade just the British pound yen in the Asia, as well as gold. I used to trade the DAX. Indices, the asset classes, they trade differently. Indices usually have a bullish bias to them in their day trading. Equities are a whole different monster. So my suggestion is to focus, choose one asset class, and within that asset class, choose maybe one or two instruments and learn how they move. Any comments on trading metals and indices on the Asian market? You're going to really struggle trading indices on the Asian market unless you have a good strategy that you've tested, because the spreads are quite high. In terms of metals, yes. So gold does trade during the Asian market. Yeah, gold is quite active. So it's a good one to look at. It was the election of a new Jap. Oh yes. Okay. Hey, thanks, Sarang. So the movement that we had on the British pound yen was the election of the new Japanese PM. So well done. Sounds like you're quite onto it. Do the lows and highs of the Asia session get revisited in the London or US sessions? Not always, but there is a situation that often repeats itself. Sometimes you see in between the Asia, what I've noticed, and the London session, is that let's say you made a new high in the Asian session just before the London, so the London pre-market, you might get like either an extension above the Asian high, then a reversal down, or you get a short retracement from the high and then a continuation up. So the best thing, Norman, for you is to choose the asset you're interested in, go back for the last 2 weeks, put on the trading sessions indicator, and take a look at how the price has reacted between the Asia and the London session. Yeah, sometimes I watch days highs and low if it's relevant. Sometimes weeks high and week low. I just put two lines, one for high, one for low. So for example, in the instrument we are just watching, I put on my own charts, I had the week high for the British pound, Japanese yen, because we were trading in a range. Did you sell at 205 just before the BOJ intervention in July? I did sell. However, I was pretty sad about that one because I didn't hold my trade. So I took quite an early profit. 200? No, not 200. Is this British pound, Japanese yen? I actually trade the dollar yen in the BOJ intervention. So I took my profits around 152, 153. Swing traders that held onto their trades, they made a lot of money. Correct. Yep. News-based trop, not random. What's also quite interesting, you'll also notice, is that the news and the price often tell the same story, right? So if you're only looking at price, you can kind of take a guess at where the areas you want to sell or buy at. But if you have both in mind, um, that you know that something's going to happen at this time, then you can focus in on that price level. Um, note, just because you know what the news is doesn't mean that you can take advantage of that opportunity. Why? Because the price will move straight away as soon as the news is announced. So knowing the news is not enough. You also need to know market structure and how the price reacts. And at that level, is it a buy or a sell? Or what does it look? What does it look more likely? Yep, recording will be available. Do you not use EMAs when trading during session? I don't use any other indicators other than market session. What are the top 3 or 5 pairs to trade during the Asia session? So we already went over British pound yen, USD yen. You could look for NZ pairs, so NZ USD, AUD USD. You can also look at the Swiss franc, but the spread would be a bit higher for that. Is it worthwhile trading gold during the Asian session? Absolutely, not scalping, but you're looking for smaller swing trades. Do you prefer 1 4 hour structures for Asian sessions? I hardly look at the 4 hour for Asia. It's more like the 1 hour and then the 15 minute. Why? Because I'm not a long-term swing trader. I'm not holding trades for a few days. I'm just looking to get in and out of that session. Good day, sir. I'm from New Zealand using the Black Bull market as a broker. Is there any possibility I can come and learn and share ideas with Black Bull? I'm new in the game. Um, oh, absolutely. So we have events sometimes in the office where we invite local Kiwis to come in, and we have seminars, get to know the team. So you're more than welcome. We always send out emails to all our NZ Auckland-based clients whenever we have these kind of events. Do you invest as well as a day trade? I do a bit of investing on the side, yes, but not anything active investing, so passive. What are your thoughts on ICT concepts? I've heard about ICT a lot. I've also heard about a lot of ideas that predates ICT that are pretty much the same thing. I'll not say anything about the individual. I don't have a personal opinion on him. But the concepts are valid, but what's more important is that you have to put it in practice. This one I've already answered. What are your thoughts about the AUD JPY? I guess this pair is also active. Yes, yeah, you're right, Dave. It is quite active during the Asian session. Let's check out the spread. Spread is quite decent as well. So if you're interested, if you're Aussie and you want to trade the Aussie dollar, then it's a good choice for you. All JPY pairs usually move close together. Good to make a hedge with a different pair. You could hedge if you want, but we're kind of the session was more about personally. I'm more about day trading, so I wouldn't be hedging my positions. You do bring up a good point. What you can do is when you look at the USD JPY and British pound JPY, they're both against the JPY pair. So what you could do is use them as a convergence indicator. So for example, if you think that there's a buy on the British pound, you can double check on the dollar yen, and the price action would be slightly different. The candles would be slightly different. You get the same signal on both. That gives you an extra confirmation to go ahead. What is your stop loss percentage based on the last days? My stop loss is always 0.5% of my account. How about trailing stops instead of fixed profit taking? Yeah, so good question. Monica, played around with a lot of different things. I used to think that, trailing stops, at least you book in some profits instead of just, getting stopped out when it moves against you. In my experience, it's just easier to keep a fixed stop loss instead of using a trailing stop. Which pair has the lowest spread for beginners? So the pair with the lowest spread would be the euro dollar. It's the most liquid pair. However, it doesn't mean that I would recommend it for beginners because, of course, it really depends. What I'd recommend for beginners is a demo account for a few days or maybe weeks, and then start live with a small amount and then build up your confidence. Okay, so that's all the questions for today. Thanks a lot, everyone, for tuning in. Again, this was just my thoughts. This is what I'm personally building on in my trading plan, in my day-to-day. So I'm just sharing the idea that I had. In no way is it perfect or is it the right strategy, but I hope that you found some value as well. And it's always good to, bounce ideas around, check out how everyone is doing. If you need anything, let us know. Our office in Auckland is open door policy. Give us a call, hop on live chat, or flick us an email. Stay safe and have a good day.